if you price your education costs, your food costs, all of a sudden everything makes sense. So for some people in the gold industry, before we got involved, they would look at gold as a speculative asset. And they'd say, in the last 15 years, gold's gone up by 300%. Depending on your currency, let's say 150% in the last 10 years in US dollar. I should have bought some gold and I would have made 150%. We don't look at gold that way. We never have. Because the gold is the only currency that so we don't measure things against gold. We measure things in gold. Yeah. Okay? If you start to measure things, pretend like 1971 never happened. Just because the government said the dollar is no longer backed by gold, keep trying to live your life in gold, and you'll start to see. You'll really start to see if your wage is going up as fast as inflation. So it's a little bit long-winded, but the platform itself, the power of the platform is it lets you live, earn, spend in gold. It lets you do it legally. It lets you do it in a tax-compliant manner. Because gold is no longer legal currency, when you use it in transactions, you may be generating a taxable gain or loss. That's very similar to when you used to get paid interest. Remember, we used to have this thing called interest rates? And so when you used to get paid interest, you used to have to pay tax on the gain. So it's the same thing to look at psychologically. But our dream, the reason we're doing these town halls, the reason we're out there meeting everyone, is we think there's a small chance that this could really become big, like PayPal, or something like Skrill or NetTeller, which have tens of millions of users. We almost have 1 million users now. It's only been a year. We have over $50 million, close to $50 million on the BitGold platform. But as a group, we have another business called GoldMoney, and the GoldMoney business is close to $1.6 billion, and that's the business that we bought. And GoldMoney is really more of the high net worth service. It's more like a private bank. You can hold cash with GoldMoney in addition to gold. You can hold silver, palladium, platinum. BitGold is really your payments and business tool. It's what you're using on the day-to-day. You need to go buy some groceries. You need to send a payment. You need to receive a payment. You need to send some money to loved ones. You need to send someone an invoice to get paid very quickly. You can use BitGold. So, yeah.
We're often asked, gold is worthless because I don't eat it. I don't burn it if I'm cold. All these other commodities. So they're comparing it to other commodities. And the question you have to ask is, when was the last time you ate a $100 bill? Money is not supposed to be consumed. Money is supposed to circulate. It's supposed to last. And of all of the elements in the periodic table, gold is the one that lasts the most. It's got all these properties that over thousands of years, humans cooperating figured out. They tried all these different things, and gold was a thing that worked. And did gold ever stop working as being a store of value? Again, if you compare it to any other prices, no. It never stopped working. It just stopped being official currency.
Well, investing in gold mostly today.
It's a $9 trillion market. I mean, for half the world's population, almost 4 billion people, gold is still the most important measuring stick they have.
Yeah.
They're not using dollars or euros or yen or rupees. They're using gold.
Yeah.
And in some cases, like in India, they don't have wallets. They wear the gold, right? And this is how they achieve social mobility, upward mobility. This is how one family, one generation can acquire a surplus and bequeath it to the next generation, and the next generation maybe goes to college or becomes a doctor. All those stories that you hear about, those wonderful stories, they're always traced back to gold. It's really ingrained in Indian culture.
You used to do that here too,
Yeah.
Absolutely.
It's amazing if you read anything that was published before 1971, basically, when gold was demonetized. And there was even no concept in economics, there were some things, some radical ideas like Keynesianism, but basically it was impossible to separate gold from economics. I mean, you read The Wealth of Nations by Adam Smith. It's like saying to someone, you can light a fire by using water. It doesn't make sense in physics, right? You can't use water. You can't light a fire with water. People, as Josh said, for thousands and thousands of years, experimented with every physical medium that we had, and we tried lumber, and we tried copper, and we tried tomatoes, and we tried sheep, and we tried beef, we ultimately recognized that oxygen in our atmosphere creates life cycles, kills everything, even us, right? Even we die because of oxygen eventually. So let's open it to questions. Yeah.
Sorry for barging in.
Yeah, no. The idea
really all about
it's
questions.
really about questions.
Yeah,
So.
okay. So you can attach a credit card to the service, am I right?
Yes.
Through which clearinghouse do you go? Is it through MasterCard or Visa?
It's MasterCard.
Yeah.
MasterCard.
Yeah.
Okay.
Yeah.
Can anybody, the person that puts money into my account, do they have to have an account?
They have to have an account on the BitGold platform.
Okay.
So the BitGold platform is very similar to PayPal. Every user has to be a known user. We have to approve them. So they have to sign up. But once they're a member, this is how we spent a lot of money, a lot of time on the legality of how we could achieve this service. There were a lot of poorly conceived ideas like this before in the past. But the reason we've been able to gain traction is we've spent a lot of time on the legal side. So the way we've achieved this is you have to be a fully known member. But the thing is, it's very easy. We made it very simple to sign up. So it's a 3-minute sign up. And so the person that sends you money just needs to sign up. Within 3 minutes, they have an account. Then they can fund the account, send you the gold, and then you can just take the gold and redeem it out as money if you want. That's currency.
What does it cost to sign up?
So it's free to sign up, and all transactions, whether you're putting in 30 cents or $3 million, it's all just 1%. So we make it just a 1% off of the spot gold market, physical gold market. And so and then if you have over 1 gram of gold on the platform, so not a lot, you get a free MasterCard. Right now, it's the cards are denominated in US dollars, euros, or British pounds, but we will be adding more currencies over time, so that when you actually redeem onto your card and you spend the card, it's spending from your gold savings, but you won't have all the foreign exchange. It'll just be the 1%.
Could you please again elaborate, expound on the differences between the gold money system and the BitGold system? Am I to understand that gold money is supposed to work for larger holdings, whereas BitGold is supposed to be used for transactions?
Yeah, correct. So BitGold has an actual limit of 2,500 grams. We don't charge storage in BitGold, so we don't really want someone to have hundreds of thousands of dollars worth of gold at BitGold. We want them to go to GoldMoney, because at GoldMoney they have a personal relationship manager. They can call someone on the phone whenever they need. They can place orders. At GoldMoney they can hold cash. They can hold 9 different currencies. At GoldMoney they can time the price. I want to buy gold right now. I want to sell gold right now. I want to buy silver. You can also buy silver, palladium, and platinum. At BitGold, it's only using gold. We don't charge you a storage fee because we're paying the storage fee, but we want you to really use the platform. That's how we make our money. To create more of a traditional banking relationship, like a private banking, long-term wealth management through GoldMoney. And they've already started on that, and now we're really amplifying that service. In fact, I don't really run the BitGold business. The BitGold business has a CEO. His name is Daryl McMullen, and he was the CEO of PayPal Canada. So I'm more focused actually on the GoldMoney side of things. And we're going to be introducing, for example, this year some funds, so some basically non-gold funds that we're offering to our clients. But eventually, we see gold money as being kind of where you store your long-term wealth. It's still gold-backed. There's no counterparty risk, no leverage, no credit, none of that stuff. But BitGold is where you do your transactions. It's where you create your money, you earn your money.
You mentioned James Trump. He's a very well-known character in the industry.
Yes.
Is he on the board or still active, so to speak? Or?
Yeah, he's a board member. In fact, when we acquired GoldMoney, they received 3 board members. So there's actually equal, because we have independent board members, so there's actually equal representation on the board from our side and their side. But yeah. Any more questions?
I think it's another important part of the BitGold platform is what we'll be launching next week is the business accounts and the merchant platform. and again, this idea of gold being money, not being an investment, so I don't have to time, I don't have to think about when I want to buy gold. This allows you to earn gold. So a company can be selling goods online, and maybe the person online, or there's lots of different ways you can use it, but if you're a business, you can actually send an invoice to someone. They can sign up and pay with a MasterCard in US dollars or euros or any currency, and you receive gold, you earned gold on the platform. So it's a way that you can actually invoice and earn gold by selling goods, selling services. And so it's creating these tools to make, a small business can have a bank account where they have payroll software and invoicing software. We're just building the tools to make gold money. So that's what BitGold's about. It's not just about buying and saving in gold. It's about using it and earning it and sending it and sharing it and all of the different things you do with money every day.
Now here's another question, maybe a tad a cheeky question. I read that Peter Schiff, also a well-known character in the industry, has made a case that his vehicle, his instrument is less expensive than yours. What do you make
Did
of
you
that?
see the rebuttal that I wrote?
No, I haven't
You didn't
seen
see it? Oh.
Please.
Well, he took it down, so that's all you need to know.
Okay.
But there was a rebuttal. I wrote a very long rebuttal, and I don't know if anyone else read it, but and then I had a private debate with him, a 3-hour debate. So
on the internet?
on the phone, yeah. He doesn't want that to be public, trust me. But it's all good between us and Peter Schiff. He made a mathematical error, first of all, but also he made just a business logic error in the sense that, say you deposit gold into BitGold. Also, there's a lot of things that were wrong because he didn't actually fully understand how the system worked. You can in fact redeem gold without it being a tax event. So when you buy gold in the BitGold platform, you're buying an interest in an actual piece of metal. It sits in a specific vault, and that's a physical property interest. If gold goes up and you decide to take your metal, you decide to take delivery of your metal, it's not a taxable event. You haven't sold your metal. You've just taken possession of the metal. So Peter Schiff was trying to say that if you convert the metal into other coins, you may have a tax event. But he wasn't well versed in our actual business because that's not true. Any questions from this side?
I have another question regarding AML.
Yes.
I believe that you are a Canadian company, aren't you? Yes. And you probably are, your financial authorities have look inside your company. You have a registration of some sort.
Yeah, we're regulated.
Yeah, you're regulated. Thank you. What is the connection between, or what is the relationship between the financial authorities in Canada and, for instance, in Sweden or in the rest of Europe?
So
I mean, if I would, for instance, have a friend that have a lot of money on an Asian account or an account in Cyprus or anything, I want to transfer to you. What will happen if you take it step by step?
okay, so again, if you're asking about whether we report anything to Swedish authorities or to any actually global authorities, the answer is no.
In essence, yeah.
In essence, no. However,
what can happen?
We are fully regulated, and if we were to receive a subpoena or an inquiry into your account for whatever reason, we would comply. We're also a publicly traded company. I mean, we're not in the game of hiding people's assets. But what I will tell you is if you're familiar with some of the new laws that are being implemented now in the offshore banking world, they don't view physical gold as a financial asset. So this is a pretty big deal. So we have a lot of clients that we know that have had assets all over the world, and just because they're expatriates or whatever, they all of a sudden have to report and make all these big filings to their local government. There's tax sharing information. I think it started as of Jan 1, 2016, so it's very fresh, and a lot of people still don't know about it. But what's interesting is, the government can't have it both ways. They tell us gold is no longer money, but then they can't treat gold as money, right? So they in their definition, gold is like buying grains. It's like a commodity. It's like buying lumber. But what's special about gold is it holds its value. unlike lumber. I mean, it's not expensive to store. It doesn't cost a lot to move. So you know, when you're buying, if you were to say transfer funds from a Cyprus bank account, you know, it's within the banking system, the transaction. But then as far as Cyprus is concerned, you've bought some gold, and that's where it ends. And as far as, you know, reporting it to anyone, we don't have any obligations to report it to anyone.
So the way the laws of the internet works is when you buy gold from us, it's like you showed up in Canada and bought gold, like a gold coin. So it's just, you're just buying property. And you know, once you redeem it, if you send it to your house, and depending on the jurisdiction, there may be local tax or something. But from a standpoint of once you buy it, it's not like opening a bank account. You're buying a physical asset that has the regulatory of how we store it for you.
Yeah, but I mean, this all sounds really good, and I know this. But say that this is becoming really popular, for instance, and I mean, authorities don't like as they do not like gold. Do you see any risk in this? I mean,
It's a risk in the sense that you won't be able to hide what you're doing at BitGold, right? It's not a risk in the sense that we'll be shut down, because we built the platform with that in mind. We knocked on the regulators' doors, and we came in through the front door, and we said, this is how we want to do this, and we spent 2 years figuring out how to do it. And so the process that we have, the framework that we do it through is 100% accepted in Canada. We're now going through our approvals in the United States. It's accepted in the UK and in Jersey. We're also regulated by the JFSC, the Jersey Financial Service Regulator. So there's no risk that the government comes in and says, you're not allowed to do this, because we're doing everything according to law. You know, you're buying it as a fully KYC'd and AML client. We know our customer. We ask for your ID. The funds themselves are always originating from the banking system. We don't accept cash. So you're basically, your funds in and your funds out is either a credit card, a bank wire, you know, something like that. And then the last piece, and this is the piece that got previous attempts at doing this, and in general, this is the big ideological problem that the gold bugs have, is most gold bugs don't believe in paying tax on the gain that they generate. So I'll give you an example. Let's take 2015 as an example. So I'm making $5,000 a month, and every month I take my salary and I put it into BitGold. And every time I do that, the price of gold is a different price, right? And then throughout that month, I'm spending my gold to buy groceries, to pay my rent, and every time I do that, the price of gold is a different price, right? All those little transactions at the end of the year, if there was a gain between the price that I bought my gold on average and the price that I sold my gold, that delta, as it's known, the gain, the difference, has to be included in your overall income when you report your taxes. That's the law. So we created a tool that just, it's one button, you click it, it exports a CSV file, you add it to your software, and you get it. Now, by the way, it could also be a loss. It doesn't necessarily have to be a gain. But the point is that I think that's the most important one. Where governments would potentially have a problem, not with us, but with our users, is if we were promoting tax avoidance. And we're not promoting tax avoidance, we're promoting tax compliance.
We find it's important if you use gold as money every day and you generate a gain, and over time you will. You know, mathematically, gold prices have basically always been rising, so you will have a gain over time. You're only paying a tax on part of that gain, so you should at least have the gain in the first place. You know, don't get worried about the tax side. You know, that's why we provide the tools to allow you to report it. And every jurisdiction has different laws. You know, some countries don't tax the gain on bullion. Some states or some local jurisdictions. So everyone's got different laws. That's why we provide the tool to make it very easy to understand if you have a gain and how you can report that if you need to.
And also, I think that's where the real potential lies for the movement, which is BitGold. You know, I agree with the gold bugs that there shouldn't be a tax on gold, because if the government went off the gold standard telling us that it wasn't necessary, but the price keeps going up, shouldn't citizens have the right to use gold as currency? And so I think the chance that we have to fixing that is creating a movement. The more people use it, the more people get politically organized. Yeah.
I think actually Sweden has got the same set of rules that you just explained, but I'm not quite sure. Would you know for a fact that the same rules
I've looked at it. So yeah, investment bullion in Sweden is the same thing with gold. So there's no tax on basically there's no VAT tax on bullion.
Correct.
But if you generate a gain over the course of the year, again, another really simple way of thinking about it is, remember when interest rates were 3%. So say you had $10,000 in your account. At the end of the year, you had $10,300, and you spent the $300, right? You spent the $300. Well, after you spent that $300, you still have to pay tax on that $300 gain, right? Whether it's 20% tax, so $60 in this case. But it's just a way to think about it. If you make free money, in the money measurement system, then you generate a gain, and you have to pay some tax on it. Do you guys pay tax here even?
Mind you, there is VAT on purchases of silver, not on gold. But
Yeah, silver is normally not viewed as a monetary metal by most nations, and we actually don't promote silver as much as other people. We never fell in love with silver, Josh and I. We only like gold. We think that silver was always the poor man's gold. It was always, it's just so much more abundant in the physics, in the earth. There's so much more silver. And it's a byproduct of almost every type of mining. You mine copper, you get some silver. You mine zinc, you get some silver. Gold requires you to entirely focus on mining gold, and it's the most arduous and difficult thing to do. I tried mining for gold when I ran my hedge fund. It's impossible to make money. It's basically all the time and the energy and the labor you're putting and all the capital, and you're totally discounting the fact that you had to be lucky to find the gold in the first place, right? For every successful ore body, there's 5,000 failed, exploration projects. So, we really think that gold is the only one that should be used. Silver will obviously go up over time because it's a noble metal. It's immortal also, like gold. But silver will go up and down for different reasons. It's also an industrial metal. So as the economy is expanding, there's more demand for silver in anything from solar panels to basically anything that silver is used. A lot of industrial silver.
So it can be a good store of value, it can be a good investment. You don't have any problem with silver. It's just not as good at money. And again, we built the technology of BitGold not to be an investment, but to be money.
Any more? Yeah.
So if I get it right, every time I got some BitGold, what the authorities and the banks see is I buy gold. It's not that I'm making a bank transaction. I'm not depositing some money somewhere.
It's like you went to your bank, you got some cash, you went across the street to a gold dealer,
Okay.
you bought some gold, and then you drove to Brinks and you said, Brinks, please store it for me. That's what it's just a software, that's what our software does. But it's doing it instantly, and it does it seamlessly. So it's like an operating system for gold. You can use the gold instantly and quickly. Yes?
How do you operate this in practice? I mean, if you have an expanding business, which I understand you do, I mean, you got to buy gold every day or buy every investment or buy every deposit. How do you do that? I mean,
it's a great question. So the big challenge in the gold industry to doing this, the first was the legal challenge, which we discussed, but the second challenge was a technological challenge of creating a gold exchange, a physical gold exchange, where we could instantly settle physical gold transactions. Because the MasterCard settlement cycle, when you swipe your MasterCard, the merchant has to be paid within 1 day. And so it's a 24-hour settlement cycle. When you send a Swift wire or an IBAN or a SEPA, those transaction settlement times are 1 day. In the gold world, before Josh and I came into the gold world, the settlement time for physical gold was between 5 and 7 days. If you wanted to trade in the Champions League of gold counterparties, right? You basically were buying the gold instantly on the phone, but your counterparty had 6 to 7 days to deliver the metal. So what we did was we created our own gold exchange. It's called Aurum, and it's the technology underlying the entire BitGold platform. This is why James Turk was excited to sell us his business when he saw it. And the way the technology works is, for about a year, we went to all these counterparties and we said, look, this is how you're trading gold now, but what if we could show you that you could trade gold a lot faster? And we convinced them to join our platform where they're making a market. They're always on the bid, they're always on the offer, because they're doing it anyways. And the difference that we did, our secret sauce, was we partnered with Brinks. And Brinks has 106 vaults around the world. And then we connected a server directly into Brinks that tells us the moment that a human being in Brinks moves metal from counterparty cage to our customer cage, or vice versa. And the result is we can get the quotes from the counterparties really quickly, and we know very, very quickly when the counterparty moves the metal in or out of the cage. And so as a result, all that Aurum is doing, or our technology, or us as a company, is we're just matching your gold demand, the users, with gold supply from the bullion banks, from the counterparties, or vice versa. When our users are redeeming gold into currencies, it's the counterparties that are buying it from them. And it just does this very instantly. I mean, we've been able to physically settle a gold transaction in 10 or 20 minutes. And so do you remember, how many guys have actually used BitGold here? Okay. So how many of you noticed that when you make a deposit into BitGold, it shows up as pending, right? And you can't use the gold until it's confirmed. Only then does it go into your vault. So under our contract with you, right, when it's pending, we guarantee the price. At that point, you have the price. But the gold isn't settled, the transaction isn't settled, it's a real world transaction until Brinks tells us they've received the metal. And that's when it becomes confirmed. And what do we say? It could take 24 to 48 hours, because that's how long it could take. But in reality, as most of you have seen, it happens much quicker. It generally happens, if it's not on a Saturday or Sunday, it's going to happen usually within half an hour to an hour. Sometimes it's more quickly, and sometimes it does take 48 hours. I mean, it's just unfortunately there can be a situation, but the point is, from a legal perspective, you're protected until it doesn't become confirmed. Then we're basically responsible for the price to you, and that's the key. So again, that confirmed state of a transaction is when Brinks tells us that they've received the metal.
And when can I start spending it?
Only then. Once it's yours. Once it's allocated to you in the cage.
And that's the difference, between people that maybe have tried different gold certificates or different programs like this before. We make a third party always verify that there's real gold there in your account. So that, it's like Uber or any of these matching services where we're using software to make sure that you're always matching up and connecting people. Again, you're buying your gold, and but we got to make sure it's there first before you can go use it.
What happens if Brinks runs out of facility?
Brinks is just a custodian. It's not.
Okay.
So Brinks' only job is logistics. Protect the vault, move the metal from the counterparties to the vault. There's a massive gold industry. It's about $9 trillion, but $4 trillion of gold. Half of the gold is jewelry, so it's worn by people around the world. Half of it, though, is investment gold. It's bullion gold. It's the same gold that you guys are depositing. That $4 trillion trades about $70 billion a day, every day, between all these counterparties. There's two standards for trading gold. One is called LBMA, London Bullion Market Association. There's about 100 members. To become a member is very difficult, very prestigious. And the other is called COMEX, which is the Chicago Mercantile Exchange format. We only deal with counterparties that are members of those systems. The gold that we're buying usually lives in the vault for its entire life, from the time that it gets refined. The second it leaves the vault, it breaks a chain of custody, and then it has to go back through one of the members. That's why when you redeem your gold at BitGold, you can't deposit it back. It would cost us too much to refine it. And so it's really a function of always dealing with this, high chain of custody and chain of integrity gold. But there's counterparties, I don't know in Sweden, but any big bank that you've heard of will generally have a gold bullion division in the bank. All it does is buy gold from miners and sell it to people that need to buy it, whether it's jewelers, or in our case, other counterparties. So there's always enough gold.
Yeah, I think I've dealt with the physical desk at SEB before. So again, they'll all have some sort of standard gold, even still in the banking system.
Speaking of the banking system, again a question about, shall I say, financial security. If there would be a bail-in in the banking system, there is now a lot of talk of coming bail-ins, not bailouts, but bail-ins.
Yes.
Would those bail-ins affect these holdings in a negative sense? Would these holdings be affected by a bail-in?
We're outside the banking system. Remember what I said in the beginning when I ran my hedge fund in 08 and I experienced, what's so special about gold is it's the only asset you can own that isn't someone else's liability. Think about that for a second. Anything you own is someone else's liability. If you own a share of Apple stock, you're betting on management. You might love the products, but the people that are actually managing the business long term are the ones you're betting on. Okay? When you buy a house, you're betting on your ability to maintain the house. There's still a lot of counterparty risk, a lot of things that could go wrong with buying a house. Any asset that you buy, basically, a car, anything that you buy, when you buy gold and you hold it in your hand, it's yours. No one else can touch it. So it lives outside the banking system. Again, depending on the level of bail-ins and how bad things are going to get, I could see a scenario where maybe they do come to us, right? If things get really, really bad. But we have allowed you to diversify your geopolitical risk by having gold in different vaults around the world. And the beauty about this is, when you move gold from London to Zurich on the BitGold platform, you are moving physical property from London to Zurich, which means you're totally transporting the legal construct through which someone needs to attack you. If you're about to get divorced and you move gold from London to Zurich, your ex-wife has to go to Zurich, courts in Zurich. I mean, you're moving physical metal from one location to another. So that would reduce the risk of bail-ins, because a country like Switzerland never confiscated gold before. The only country that has actually confiscated gold was the United States.
And Sweden.
And Sweden also. Oh, wow.
So basically, who's the custodial account behind Brinks?
Brinks is the custodian.
Yeah, but that's the custodial. I know, I deal with them on a daily basis. So, but again, I know all the mechanics behind it. So, who really owns that ownership?
You own it as a customer under
your flag, under the Bitcoin, or does that go into the upper?
No. So basically, when you open an account with us, okay, you're entering into an agreement with a segregated customer entity called BitGold Vault Inc. That customer entity has a cage at Brinks.
Okay, got you.
And then every day, we compile a ledger of all the holdings, and we allocate your holding into a specific physical bar with a serial number.
Got you.
And so if we go bankrupt tomorrow, we don't even have access to that gold. It's not on our balance sheet. All that gold is insured by Lloyd's of London as well, separately.
But no way how that works.
Yeah. So, but if we go insolvent tomorrow, we can't access that gold. A trustee just basically gives back the gold to the clients.
So is it your trustees, or is it something behind you in that wealth management system?
No. So if we were to go bankrupt, a judge would appoint a trustee. We would have nothing to do with it. But we structured it so that if things went bad with our business, our customers wouldn't be impacted. And there's always a check and balance as well. You can always just take your gold out. You can always take your gold out.
One more thing about the card. Last time I used it, the card doesn't actually have money in. I have to log into my account and transfer. Is that for security purposes, or you planning to make it go on the fly?
So we implemented auto load. Maybe you didn't see. You can now set your card to auto load. So you can say, I always want to have 500 euros on my card. And then the second you go below, it sells gold and loads it.
Okay, I didn't see that.
So you should check that out. In general, the reason that we don't, let you swipe and it basically reserves against your gold, we will do that at some point, but it is an extension of credit. And remember our ethos, we don't want to get into credit. There's enough credit in the world. So, we need to physically sell your metal, get the cash from the counterparty, and then use the cash to fund your metal. We figured out how to do it very quickly, as you can see. And so you know how it works. If it's a few $100s or euros, it's instant. If it's more than that, then it has to go through a human approval in our headquarters. So that's why if you try to redeem like 2,000 euros or 1,000, you may notice it takes sometimes an hour, 2 hours, or 5 hours. But if you do small amounts, it's instant. And eventually we'll expand that as well. And we're very proud that we haven't been attacked. We haven't been hacked. People have tried to hack us. We have a very, very smart chief technology officer, and we have a very smart team of developers. But also, we haven't been defrauded. We've done almost $80 million of transactions in 10 months, and we haven't had any fraud. And that's because, the Bitcoin community doesn't like us so much because, we ask for a lot of information, and it's a closed loop network, and it's not, ideologically decentralized. But look at the facts. How many people get screwed over in Bitcoin transactions every day? And people on the BitGold platform, bona fide users have never been screwed over. The only thing that people have had to say against BitGold is we used to give out a lot of free gold. And the point of that program was for you to share the link with your friends, and if they signed up, you would get free gold and they would get free gold. But the way that the terms of service were specifically written was, if the people you refer aren't signing up and using the platform, like they don't even log in within 60 days, then that was a BS referral, it's a fake referral. And you can't just mine the gold, so we would take that bonus gold back, and some people went crazy online and stuff like that. But other than that, no one's been able to defraud us. And I think it just speaks to the fact that there's no credit in our system. We really don't take any risk. It's your gold, and it's your software. You're moving it, you're deciding what to do with it.
How are you supposed to convince people to store their, because gold is a store of value, but many people see it as, oh, okay, my gold is going from the grams, or the ounces are going from 1,300 down to 1,200. How are you going to convince people to store their money there when they see their value in dollars go down?
It's a great question. This is what's going to define whether we become a massive business with tens of millions of users, or whether it's a niche business. So the example you said, where gold goes from 1,300 to 1,200, it's the same thing when your Swedish krona is declining against the US dollar. The difference is that you continue to consume here, and you're not noticing that prices are going up or prices are going down, okay? Or for example, when the Swedish krona is declining, maybe Swedish stocks are declining as well, and you're not noticing it. So that's really a function of psychology, but the way that we think the platform allows you to do that more easily is that where you're really scared if gold goes from 1,300 to 1,200 is if you bought too much gold at 1,300, right? If you were speculating on gold, I'm going to buy gold now, I'm going to sell gold now. What our platform helps you do is stop thinking about the price of gold. The second you're earning a surplus, you're moving in. So it's tons of transactions creating different volume-weighted average price entries and exits. And then you find that it's remarkably stable. Also, very important point to make, it may not be right for someone in Sweden today to be fully using it yet psychologically. Maybe they're not ready for it. But there's plenty of places in the world where to them, the gold is always going up. It doesn't pull back from 1,300 to 1,200. So for example, in Brazil in the last year, the price of gold is up 60%. And so they're not really concerned if it goes from being up 60% to being up 30%, right? Because throughout the year, they've been using the gold and they've been gaining. But it is a difficult thing. It goes back to the psychology and the philosophy of what I was discussing earlier, which is they've convinced, for the first time in 5,000 years, they've convinced humans to accumulate a surplus and not get paid interest, which is crazy to me. No interest, but also to willingly work for a currency that has absolutely no backing. And they're just able to trick you into thinking that at times this currency is stronger than this currency, and now the dollar is strong. Remember when the dollar wasn't strong 5 years ago? And no one even talked about dollar. Now the dollar's strong again. And now the euro is really, really bad. Well, tomorrow the euro will be really strong. But they just keep declining against each other, and they lose the baseline. You forget what the baseline was. The baseline was that in 1971, gold was $35 an ounce. Now it's 20 an ounce. So it's gone up 8.1% per annum, compounded for 50 years. Show me any other currency that's done that. None have. They're all down 99% versus gold. So it's difficult. The other thing that I notice, I've spent a lot of time studying gold. And look, the average person in this room is older, right? Why is it that older people tend to gravitate towards gold? Because they've seen the inflation themselves. See, if I tell you that in your lifetime, you're going to continue to have 3, 4, 5% inflation a year, you're going to say, I don't notice it. The economists tell me no, but I'm noticing that my iPhone got cheaper. You're not going to believe me. But when you're 70, you will have seen it. And that's when you're going to try to tell your grandchildren, hey, so what we're trying to do, like all these people here have seen it. We've learned, we've studied it. I've seen it since I got into business in 2003. I've seen it myself firsthand. And then what I've also done is read thousands of years of economic history. But people that are generally older have seen it firsthand. They've seen this happen. And so they know that it's going to continue happening. And again, even if you look at all the metrics, it's probably going to happen worse than it ever has in the next 50 years. Because at least 50 years ago, you had a fair interest rate, 5%, 7%, 10%, 8%. And you had a much better balance of equality, so there was actual wage growth. There was a much healthier prosperity. Like today, the inequality is terrible. There's no wage growth, and you have negative interest rates. It's insane. So I really think at best things will just continue the way that they were, where gold goes up 8% a year on average for the next 40 years. But at worst, you're going to have situations where commodity prices start rising, not like the 70s, like the French Revolution period, where all of a sudden, a piece of bread is going up 10% a week, and people start to buy more bread, and capital shifts from, once people just get a glimpse of hyperinflation, no one here knows what it looks like. They haven't lived through it. I think so, right? But the second you go to the supermarket and the tomato, well, last week the tomato was 10% cheaper, shit. Well, then you go to the following, okay, this time I'm buying more tomatoes. Now, everyone starts to do that, and then it's over. It's just over, and at that point, asset prices decline, real estate, stocks, and people demand another commodity for their trade, for their goods and services. A dentist is not going to operate on someone for this paper currency. He needs to buy tomatoes. Tomatoes are going up. He wants gold, right? He can't charge tomatoes. What is he going to do? Where is he going to store the tomatoes? So this is the concept that people have to understand. It's not easy. But what's helping us is that in 50% of the world, these currencies these hyperinflations are happening. In Brazil, in Russia, in India, in Japan, these things are happening. Turkey. I mean, it's every day I hear of a new currency. And how I know about it is when people sign up. People from Peru sign up to our platform. They're using it in Peru, Argentina. And they don't need me to tell them what's wrong with the fiat currency system. It's just us in the West that it's funny because we're supposed to be the enlightened ones and the smartest ones, and we're acting like the dumbest ones. We're incurring all the debt, we're using fiat systems, and we've convinced our citizens that these currencies aren't losing value because the cross is, one time the US wins, one time the euro wins. Sorry, next question, yeah.
My English isn't good enough, but I wonder, what does make the gold go up and down?
Nothing. Gold is just a piece of metal. It's the same thing it was 5,000 years ago. When Cleopatra wore gold, the same gold, it's no different. It's just an element, okay?
But it's gone up.
It's the money that's going down.
The value of
The value of money is going up and down. So if the value of money starts going down...
Oh yes, but I mean, the gold is stays.
Yeah, but because if you compare gold...
But if the gold mines disappear, or if there is
it won't matter.
Yeah, because
It won't happen.
Yeah, no, it won't happen, but it also won't matter. Josh,
yeah, I mean, the price of gold, the way that gold is in geology, it takes a certain amount of energy to get it out of the ground.
Yeah.
But we know where a lot of gold is. You just don't mine it all at once because
Is that enough?
because yeah, there's always going to be enough. And even gold itself, people say, okay, well, if this platform gets too big, there won't be enough gold to use it. But the amount of gold in the world is actually the same as the value of all the paper money in the world. Not the bank accounts, but just physical paper money. Like, and are people worried about paper money running out anytime soon? I mean, obviously they're going to keep printing more paper money, but right now, I mean, just to get your head around the size of the gold market, because gold does not get consumed. I mean, it may turn into jewelry, but you can always just melt it down and make it a bullion again. That's why gold works as money, because it's not being put into, you know, it's got a small bit that you use in electronics or dentistry, but again, those electronics are always turning over. Your phone, you know, wears out, or you get a new one.
It's a security to keep gold. I mean, you say it's not money, it's...
Yeah, but that's what money is supposed to be. Money is supposed to be a store of value between when you need the tomatoes and when you need healthcare, and when you earn it when you're working more hours when you're younger, and then spending it more when you're older. Like, money is supposed to be just this thing that lasts between when you earn it and when you need it. And so gold is an element that just lasts, and so that's, yeah, it doesn't. You're not consuming it. You're using it to hold value.
But I want to just add to your point. I mean, the reason it doesn't matter how much you mine gold, though, is because for 5,000 years we've been mining it. So there's a massive stock of gold, $9 trillion already.
It's hiding away somewhere.
It's sitting in everyone has access. Everyone's very close to gold, whether they know it or not. And so it doesn't. The price of gold isn't going to move up or down significantly based on production, because the amount of gold in the world is 190,000 tons, and the annual production is about 2,500 tons. So it's a very low amount of the overall amount of gold. So 1 year of production, more or less, doesn't change the stock of gold. It's the amount of gold that's outstanding that's the key to why it's money. It's the social network everyone wants to use. It's like Facebook. Everyone's already using gold. Platinum has very similar characteristics, but not enough people use it. It's like a small social network nobody wants to use. So that's really the point. But again, if there's any point I could drive across, is gold doesn't go up and down. It's not going up and down. It's every year there's more money floating. They have to, because they run deficits, can't pay the deficits. More money's floating around, fiat money. Okay?
Yeah. So another way to look at it is, if you compare gold to real things over time, it doesn't change very much. It changes versus money over time, but so we did a report for Back to the Future. Marty McFly, 1985, you know, went 30 years in the future to 2015. So that happened last year, where Marty arrived in the future. So we wrote a report and we looked at it. How have prices changed over those 30 years, from 1985 to last year when we wrote the report, if you measured things in gold? And if you look at all of the major things you need in life, if you look at food prices, they basically haven't changed in 30 years. A Big Mac at McDonald's cost the same thing in 1985.
Well, that's the other thing,
Exactly.
is shrinkflation.
Yeah.
Yeah.
So it's the same price, but you get less. You get worse quality meat, you get worse quality food, and you get smaller amounts. But the price actually hasn't changed. So it actually means that our economy is getting less efficient.
As a coordinator.
Yeah. In things like an iPhone, it's getting better. But the problem is, things like food, it's not getting better, because we're not measuring it efficiently.
But that's because they need the iPhone to manipulate you to accept fiat money. but just one more point on that I want to make. In 1980, the average price of a house in the United States was $100,000. When you divide $100,000 by the price of gold at the time in US dollars, it was 7,800 grams of gold. So 7,800 grams. The average price of a house today in the United States is $308,000. When you divide it by the price of gold today, it's 7,799 grams, 1 gram less. So that's the point that I want you to understand.
And if you go back to an old Sears catalog, Roy actually did this. If you go, so if you go back to an old catalog.
Did you understand what I just said before?
Yes.
About the house. Okay. So the point is, don't think about the price of things. Think about things in grams of gold. And just like stocks, you know, I learned this in the stock market. what drives a stock price? Well, over the long term, fundamentals. What the company's doing, earnings, profitability, equity, how much equity is in the business. But what drives the stock price every day? Speculation, voting. Is Apple going to do well tomorrow? Is Apple going to do poorly tomorrow? Is the Apple car going to come out? And that creates a situation where the stock price, it's called a discovery process, market discovery process. The stock price goes like this over the short term. And sometimes it overshoots and sometimes it undershoots. But over the long term, there's the trend of the fundamental line. And it's always hovering on it and touching it, touching it, touching it, touching it, touching it, touching it, touching it.
It's never this trend.
With Apple, it hasn't been for the last 8 years. But if you go from 1980 to 2002, it was like this. So it depends. But it's the same exact thing with gold. The price of gold every day is speculating. Maybe we won't have inflation. Maybe we will have inflation. Maybe this interest rates are going up. Maybe. But over the long term, we always know what happens. They print more money, they run more deficits, the system itself is flawed, and so the price of gold always has to rise.
I have one question there. The last 5 years, we're going to have the biggest credit expansion in history. But still, the price of gold has gone down.
Well, it wasn't the last 5 years. It was the last 9 years that you've had the biggest credit expansion in history. And in the last 9 years, depending on which currency you look at, gold is up 100%, 150%, 200%. What you're specifically referring to is, in 2011, gold in US dollars was 1,800 in like 1 month. It went from 1,400 to 1,800 that year. And it touched 1,800. And since 2011... Yeah, correct, yes. And from that one, whenever it was July of 11, it declined to 1,050 in US dollars just now. Okay? And you might say, well, that's terrible, right? I mean, and it is. It wouldn't have been fun to basically have started your journey with gold on that day, right? It wouldn't have been fun. But the point you have to remember is gold in euros. Remember, at that point in time, the dollar was 140. The euro was 140 versus the dollar. So it was like a perfect storm. And then since then, the dollar has gotten way, way stronger, but the euro has gotten way weaker. So for you, a more relevant currency would probably be euro, because you're living here, then it would be... What?
Yeah, it's fairly well correlated.
I just don't know. I don't know the SEK performance, so I'd be quoting it. But
it's 412 Swedish kronor, and today we have 318.
Oh, really? So it's near the peak.
No, it's 100. No, if you take it in grams, it's 412 in peak, and I believe today we have 318 in Swedish kronor.
Oh, okay, so it's still about 80 down, about 20. Still, yeah, but that's not terrible when you consider again. You didn't just decide one day, I'm taking all my money and I'm buying gold. And a lot of people did that. That was the mistake. There was a lot of speculation. If you were using gold as a system, like I started using gold as a system like this in 2004. And I would just, every month, continue to use gold. And so my average price, even in US dollar terms, is still around that 1,000 level. Even after buying and selling and buying and selling. And there were times where I sold a lot of gold back then, when it became too large for my portfolio. The other thing about gold is, when did it go up like that in 2011? Was when everything else was going down. It was there for you as money when you needed it the most. In other words, when the Greek banks were suffering, when Cyprus had the bail-in, that's when gold went to basically 1900. It was at the best possible time when you needed it. And a lot of people, like myself and Josh at the time, were saying, like, there's obviously elements of speculation here. But over the long term, 5 years is nothing. 8 years is nothing. The question is, what system do you want to use that you can measure your journey in capitalism, in life, and know that you'll leave something basically to future generations?
Of course, but it's still a paradox that, this happens.
No, but my answer to that, though, on the credit cycle is, the market started pricing gold very aggressively, I'd say in 2004. Because it was basically at $300, and then it got down to around $220 when Gordon Brown sold all of the UK's gold. And then since then, when the credit expansion really started, 2004, 2005, 2006, 2007, that's when gold started roaring. And it was going up about 20% a year those years. When 2008 hit, and it looked like in September the world was over, it was going to be over. That's when for a brief second, everyone's trying to get their money out of the financial system. So gold went down just a little bit. But the second that money, and also this is a function of oil, which we talk about, oil was also going down. But the second money came back into the system, when we realized the world wasn't over and the government had saved Lehman Brothers, they were going to print a bunch of money, that's when gold went crazy. And it went from about $800 in 2008, 3 years later, to $1,900 in US dollars. So it was a unique, very, very unique situation. But for the people that were in gold for 30 years or 20 years before, they didn't look at that time and say, oh my God, now I'm going to buy more gold. That, I mean, I don't know in your cases, but I assume to you, nothing changed. It was just gold. It was the same gold you were buying all the time. It just became worth a lot more. And I think that's the way you have to look at it.
I think it's an important point, so I'll say one more point on that. If you're just taking gold as part of your monthly savings, and you're buying $20 a month, or $100 a month, or $1,000 a month, it doesn't matter. But that peak where gold overshot and then came back down, it was actually very small, because mostly it's moved sideways since then. So if you look at from 2012 until today, in almost every currency, it's either moved sideways or it's moved up. It was just the 1 year that it overshot. So if you're buying every year, yeah, that year, then maybe your savings wasn't worth as much that year. But that's 1 year out of the last 15. All the other years, if you would have been doing that, you never know when that's going to happen. So if you think of gold as money, as savings, and you're just doing it on a monthly basis, like you taking part of your paycheck into savings, then gold always works. If you're just trying to buy a lot at once, maybe one time this year and one time next year, then it doesn't work as well in my mind. It does over the long term, but you won't feel better after 1 year unless you guessed right.
I swear, people have asked us about the price of gold for 4 or 5 years now, and we never say anything. We never say we think it's going to go up. Like, I never look at the price of gold. I make deposits in my account. Whatever the price is, that's the price. I know all the things that the gold bugs talk about, the manipulation, and one day it's going to go to 10,000. It could happen. It happened in 1971. The government told you gold was 35, then one day it was $300, literally in one day. Right? It just went crazy. But I don't treat it that way. I've been treating it as just, that's the measurement. I don't look at real estate prices in dollars. I look at them in gold. Everything that I look at in my life, I measure in gold. And then I'm not really that concerned about a 6-month performance over 1 year. I'm looking at it literally every month, and I'm spending it too. I always keep it at a fixed percentage of my net worth, and in my case, it's about 15%. So that's my cash allocation. I have stocks, I have bonds, I have real estate, I have businesses that I invest in. I'm not 100% in gold, just like you should never be in 100% cash. Maybe you want to make an investment in yourself. Maybe you have a really good idea. Maybe you want to buy a piece of land or real estate, or you have a stock that you know a lot about and you want to buy. It should do better than gold, by the way. I'm not saying gold is better than everything else. I'm just saying gold will do better than currencies. That's all I'm saying.
Here's a question. Okay, you have made, I think, a very good case for gold, but of course there must be threats also. What kind of threats do you see in this business?
In our business, just the gold price. Like, what would make the gold price go down? Is that what you're asking, or just?
Yeah, any kind of threat. I would say political threats, or taxation threats, or.
Yeah, you could have a windfall tax implemented.
Windfall tax.
But again, that's where moving into different jurisdictions. Look, what I think would make the gold price go down is if you had all of a sudden oil really continue to go down, like maybe to $20, which we don't think is going to happen. And I think if the world really slowed down, there's some very troubling trends. Remember, gold is not necessarily always going to go up if the whole world is going down. If we're going to have 30 years of Japanese-like economic activity where there's deflation, and there's demographic problems where we're not forming households fast enough, we're not having enough kids, the fertility rate's declining, so the economy has to contract. And that's a big chance that maybe in the next 50 years, the UN is wrong, there won't be 9 billion people. Like, there's certain things that I find that could cause gold to go down, but so will everything else. Gold won't go down in a vacuum. If it goes down, it means oil has to go